Hello, I'm Pete Sweeney. I'm Asia Editor at Breakingviews. Today we're here at the Predictions 2018 event, which as you can see is quite successful and very loud, so apologies, I'm going to have to yell a little bit. Fortunately, I'm here with Pru Bennett, a longtime governance, what should I call it, wonk expert, advocate, gadfly, who from Blackrock, who's here, gave a really interesting speech, comments about the future of governance in Hong Kong and globally. Pru, you've been on the warpath, to improve the behavior of companies in Hong Kong and elsewhere. It's been a long slog for you. And as asset prices keep rising, do you expect next year to be easier or harder for your job to improve the way that companies treat their shareholders?
I think there's been an increase in transparency over the years, and I think our engagement is around that transparency so we can really understand the governance structure of the company. We look at governance as a alpha protection mechanism, if you like. What we are seeing, and I think this is a trend that's going to increase, is an interest from our clients and ESG of companies. Now, we look at environmental and social issues through the governance lens. It's a bit of a pity that the G is at the end of that acronym. But our clients, particularly our pension fund clients and their investments, don't want to see returns coming from polluting rivers, from adding to climate change risk, from poor labour practices. So it's these types of issues that we are raising more and more with boards and with management, and to encourage management and boards to make disclosures about how they are managing these risks. So to identify what the risks the company is actually exposed to, and to clearly articulate to shareholders how those risks are being managed, because when these risks aren't managed, they can end up having a disastrous impact on shareholder value. And again, as I say, our clients do not want to be invested in companies that have this negative impact on society.
And how important is the role that passive funds can play in this compared to the louder activist investors? I know you guys have occasionally made a little bit of noise, but
it's very important because we find ourselves invested in companies as a passive asset manager that have issues. The active manager would sell. We are voting in all of those companies, so we vote with all the companies that we are invested in. As I said before, for the major indices, which are about 2,500 companies globally, we're engaging around about a third of those companies on ESG issues. So while there's a lot of criticism around passive managers, we are there and we are doing something. We won't solve all of these issues in one go, but we will keep going back and putting pressure on these companies through voting and engagement to make the appropriate changes.
Thanks so much. Pru Bennett at Blackrock. Thanks.